Hello everyone. Isn't it true that we spend our entire lives working tirelessly with the hopes of ticking off that ultimate bucket list? Yet many of us put more effort into planning vacations than securing our retirements. And as one of my clients wisely put it, accumulating money is far easier than figuring out how to distribute it. And he's right. Picture this. You've disciplined yourself to invest, have a 401k, and watch your funds grow. Now, how do you ensure that it's going to last? Thanks for watching. I'm Mark Pruitt with Strategic Estate Planning Services, and let's dive into making those hard-earned dollars work for you. Now, first up, understand your expenses before you retire. Look back at your past year's spend, taxes, gifts, vacations, average it out, and surprise, that's your baseline budget. Now, we've seen clients shocked at what they spend, and the bottom line is to know what the budget is. What have you been spending? And secondly, healthcare is crucial. You need a firm grasp on your resources, including your Medicare cost and how the distribution of income could affect your Medicare Part B and D premiums. People may not be aware that determining the income-related monthly adjustment amount, which is also called IRMA, the IRS looks back at your income from 2 years ago. And if your current income is less than what it was 2 years ago, you can appeal that with the Social Security office, which could result in reducing your IRMA. Now, you still need to cover health care costs no matter what age you are, so make sure you understand your options. Now, tax planning and using tax-efficient strategies to help minimize income and tax exposure can make significant impact to many areas during retirement, including healthcare. Next, fewer accounts usually means easier management. And if you no longer have a purpose for a particular account, consider closing it and consolidating those funds with another account. Some families I've worked with have had as many as 150 accounts, and in some cases, they accumulated them because they got toasters or other free gifts for opening those accounts. Now, they were also chasing a half a point or more of an interest rate, and that is no longer paying that premium. Every account should have a purpose. If it does not, then closing it may be a good idea. Now, let's talk about Social Security. It's unique for everyone. Don't just take advice from friends. Plan for longevity. You might just live longer. And the decision of when to take Social Security is not the same for every family, so know your options. Also understand that the Social Security Administration is not in the business of advising you on your options. Their role is to implement what you have chosen to do and answer basic questions. So work with someone who can plug in your specific information to a Social Security analyzer and see what information the software provides based on your specifics. It's always healthy to gather as much information as you can to make an informed decision. Now, next, identify all income sources, your pensions, real estate, investments. As a financial advisor, I see people struggle the most with how to efficiently create income from various resources in a tax-efficient way. And your plan needs to be flexible enough to serve you now, as well as when you're 70, 80, or 90. Life brings changes, and you have to ladder income now and prepare for long-term care needs later. Align them with your risk tolerance. Flexibility is key, and long-term care can't be ignored. 6 members of my wife's family have had Alzheimer's disease, and my mother-in-law had it for 16 years. My sister-in-law started her journey with Alzheimer's at age 55. I've seen it on a very personal level, and I have long-term care strategies for my wife and me in multiple forms. My parents have multiple forms of long-term care as well. So know your options. Traditional long-term care costs a premium. Can you afford it? Layered options could include the use of non-traditional means like annuities with enhanced benefit riders that could be used for in-home, assisted living, or nursing home care. Also, some life insurance policies have additional living benefits to help pay for care. And And lack of planning for long-term care could devastate families, and at the very least, explore all of your options. Planning here prevents future headaches. You also should consider the financial future for a surviving spouse. Analyze the impact to one spouse's financial situation that would result from death or disability of the other. Believe it or not, many Americans lack a will. Get the documents in order, ensuring peace of mind for your loved ones. Now, I'll be linking helpful videos in the comments regarding more on this topic. But lastly, choosing a financial advisor from the Investment Advisor's public disclosure site ensures that they act and advise according to a fiduciary standard. Get a second opinion. This is your money, and it's a business decision that will affect you in your retirement years. And in addition, you should meet with a financial professional who is both securities and insurance licensed. Why would you say that? Because you can use multiple tools. Your financial health and retirement deserves it. And remember, this is your life's reward. You've earned it. Plan wisely and savor every moment. If you'd like to set up a time to discuss your specific situation with our team, please contact our office at 1-800-381-8870. Don't forget to subscribe to our channel for more content just like this. I'm Mark Pruitt with Strategic Estate Planning Services. When it comes to your money, it pays to be strategic.